Hi, my name is Paul, and in this video, I'm going to be covering MTY Food Group's 2023 first quarter financial results and conference call. Then, I'll briefly go over how I'm valuing the stock. But before that, I want to quickly go through what I'll be looking to see out of this quarter. And really quickly, for anyone who might have clicked on this video not knowing anything about MTY Food Group, MTY is a Canadian company that trades on the Toronto Stock Exchange under the ticker symbol MTY. The company now owns over 85 different fast food and casual dining restaurant brands throughout the US, Canada, and abroad. MTY's main business model involves franchising out these restaurant brands. However, the company also operates a small portion of particularly profitable locations, and in recent years, the company's also begun offering grocery and retail products centered around its more popular restaurant banners. Getting into this quarter's expectations, firstly, much like last quarter, I'm expecting most of the numbers to be pretty heavily skewed due to the major acquisitions of Barbecue Holdings as well as Wetzel's Pretzels. So metrics like revenues and store count can be expected to be much higher than in the previous quarter comparisons. That said, we should be getting a much better idea of the sort of baseline performance that we can expect from the recently acquired brands. This is because Barbecue Holdings will be putting up its first full quarter under MTY's ownership. Meanwhile, Wetzel's Pretzels was acquired on December 8th of 2022, and MTY's quarter technically started on December 1st. So Wetzel's numbers will just be 1 week shy of being indicative of a full quarter's performance. So yeah, I'll be looking to get additional updates on the performance of those new banners. Next, we should be getting a good look at the fully fledged out debt levels that includes all recent acquisitions. And hopefully, some capital will have been allocated towards paying off the debt. Now, obviously, having stated that, I am not expecting there to have been any additional acquisitions this time around. That said, I've been wrong the past 2 quarters, and the company did state that they are interested in buying more if the price is right. Even still though, I'm not expecting it, and I also don't expect that there will be any dividend hikes or share repurchases within the quarter. As for growth, the retail product offerings should not be impacted by the acquisitions, so I am expecting there to be continued organic growth there. With regards to free cash flow, I'm expecting there to have been positive impacts from the newly acquired operations. And unlike last quarter, the acquisition-related costs should have been less of a factor. And I'm assuming that the new streams of operating cash flow will offset the negative impacts of interest rate hikes and other general economic challenges that were expected to continue through 2023. Finally, I'm expecting to get an update on how the management has been dealing with the continued trend of store closures, and on when this trend will be expected to turn around. And this topic in particular is one that I expect will get a lot of coverage on the conference call, so I'm really looking forward to seeing progress here. Now, as is usual with MTY, I'm going to be going through the management discussion and analysis version of the report, which is only available on cedar.com because the standard version of the report located on MTY's website does not provide additional explanations and context from the management on what impacted the results. Opening up the report, we're pretty quickly greeted with a fairly modest total revenue growth of 104%. Yeah, I was just kidding about the modest part, and obviously this is not organic growth, and as I said in my expectations for the quarter, most of this gain came from the US side thanks to the acquisition of Barbecue Holdings and Wetzel's Pretzels. As for the other side of the border, most of the increase here was actually due to organic growth as well as post-pandemic recovery thanks to further laxed regulations since Q1 of 2022. Noting that, the food processing, distribution, and retail segment does appear to have slowed down a fair bit with only 5% growth. But this part of the business was noted as being somewhat cyclical in last quarter's call, so nothing worth worrying about yet. In the US, it's kinda hard to wrap my head around. The numbers are heavily distorted by the acquisitions, and just take a look at that nearly 2,400% corporate store revenue growth in the period. Now, taking a look at the change in revenue breakdown, we can see that the Wetzel's Pretzels and Barbecue Holdings acquisitions generated over $14 million in franchise revenues and about $103 million in corporate store revenues within the quarter. Meanwhile, there was $1.1 million in organic revenue growth, which was in line with the comment made on the call about seeing organic growth across almost all segments of the business. Of course, revenues are only one part of the equation, but looking at the operating expenses, things are starting to look a bit better this quarter, especially on the Canadian side, which saw OPEX increase by only 10% compared to the revenue increase of 18%. On the US side, however, there was a 279% increase in operating expenses versus a 215% increase in revenues. Unfortunately, because the US has grown to become a larger portion of MTY's operating geography, the total operating expenses did increase in percentage points more than the total revenues did. But still, this quarter was much more mixed and may be indicative of an improvement from prior quarters. Aside from the acquisitions and recurring expenses from the greater number of corporate stores, which made up the majority of the quarter's expense increases, expenses were also up primarily due to higher wages that had to be paid in Canada. And on the conference call, this did receive a comment claiming that labor shortages are improving, but that there will likely be some challenges with labor for the foreseeable future. As for profitability, I was at least partially incorrect in my assumption, since free cash flows for the quarter did come in lower than in Q1 of 2022. See, while there were less acquisition-related costs affecting free cash flow this quarter, there were other obligatory costs related to the acquisitions that I was not privy to until the conference call. So, as it turns out, in order to fulfill their contractual obligations regarding the Wetzel's Pretzels deal, MTY is required to build 3 Twisted Pretzel locations, which are expensed as capital expenditures. But at least we learned that these expenses will only continue until the locations have been completed, and that these expenditures are not indicative of ongoing long-term maintenance costs. Plus, the management already has plans to sell these locations upon completion, so the expenses will very likely be recovered through franchising. This means that we could probably tack on about $7 or so million to the free cash flow, which would already put the free cash flows above where they were in February of 2022. And that's before adjusting for the other acquisition-related costs in the quarter. So in terms of profitability, things are not looking too bad considering the current interest rate environment and heavy inflation, both of which have been negatively impacting the restaurant industry. That said, interest on long-term debt, which is not included in the free cash flows, increased nearly tenfold, up to about $13.5 million from Q1 of 2022. Additionally, interest expenses on leases also increased by nearly $2 million due to the much higher corporate store count, and there was an additional $1 million loss on the disposal of property, plant, and equipment. This, along with the near $22 million in depreciation and amortization, took the $1.19 of free cash flow per share generated within the quarter down to 75 cents per share of net income, which isn't terrible, all things considered. Now, with the excess left over after paying the 25-cent per share dividend, thankfully, MTY has decided to start whittling down the long-term debt by repaying over $29.5 million in the quarter. That said, long-term debt levels are approaching the top end of the management's comfort level, which, when translated, means that the company's debts are extremely high right now, as you can see by this $827 million figure coming due within the next 2 to 3 years. Taking a look at the company's liquidity, it wouldn't be hard to come away with the idea that the management was pulling a fast one here, since the total available cash that can be drawn in the revolving credit facility is $900 million, and the report shows that currently $609 million are drawn. But if you aren't paying close attention here, you might not have noticed that the drawn figure is designated in US dollars, while the $900 million of maximum allowance within the facility is not. If we convert the value of this $609 million US dollars into Canadian dollars, that would put the total amount drawn at roughly $827 million. Thankfully, the management was transparent about this in the conference call, where the CFO clarified without needing to be prompted by analysts to do so. So, tallying everything up, that leaves about $131 million in available liquidity when including the additional $58.7 million held in cash at the end of the quarter. So, despite all of the recent debt taken on, the company isn't in dire financial straits by any means. In fact, the company was able to get a good deal on a $200 million secured 3-year interest rate swap, wherein the bank pays the variable rate on the $200 million of MTY's debt, and in return, MTY pays a fixed rate of 3.32% for 3 years. So the bank is essentially betting that the interest rates will go down pretty substantially in a relatively short period of time, and MTY is locking in the interest rate that's a bit lower than the current rate on their debt. This means that the $200 million that was previously variable rate debt is only going to compound at 3.3% per year, regardless of if interest rates increase or decline over the next 3 years. Hopefully this made sense, because MTY also purchased an option to enter into a similar 3-year fixed interest rate swap on an additional $35 million of variable rate debt. And this option has a strike price of 3.48%. This just means that the company will take advantage of their option to enter into this swap if interest rates stay above 3.48%, because anything above that level will save them interest on the debt. However, if interest rates go below 3.48%, the option will expire worthless, and MTY won't recoup the premium that they paid in order to obtain this option. To simplify this as much as possible, MTY is lowering their exposure to variable rate debt by using derivatives that allow them to lock in fixed rates on a portion of their long-term debt with a third party. So this is a move that lowers the risk that MTY's debt will get out of control in a sustained high interest rate environment, which is probably a good idea on the management's part, in my opinion. In accordance with the comments made in the conference call, we did get some confirmation that MTY will only be looking to take on small and medium-sized acquisitions, unless a can't-miss opportunity to buy another big one comes along. Instead, right now excess capital is generally going to be allocated towards paying down the debt, with no plans to repurchase shares anytime soon. Moving on to the net locations, this quarter, putting aside the 379 acquired locations, there were again net closures of 39 stores, which is at the very least an improvement from Q1 of 2022. Noting that, on the conference call, we did get some good news where it was announced that closures have started to slow down, and that this quarter's net closures are actually considered to be within the typical turnover range for Q1, with these numbers actually coming out better than MTY's 10-year average for first quarters. That said, whether this data point is able to sustain a positive trend, only time will tell. But based on the management's comments, I am going to be adjusting my expectations for next quarter positively. Now, I had originally planned to do a breakdown of MTY's operations and sales by geographic location before and after the 2 acquisitions were completed. But as you can see here, the change was pretty minimal and probably not worth delving into further. So the last thing that there is to go over in the report is the future outlook. And it looks like most of this is about the same as last quarter, with the only real exception being that the economic trends are starting to look more encouraging despite the challenges that the company is facing. And building on that sentiment, in the conference call it was noted that several of the supply chain issues are starting to clear up. Also on the call, it was mentioned that oftentimes store innovations for MTY's brands are relatively inexpensive to undertake, and usually this just involves things like a fresh coat of paint and a minor tweaking of the menu, which is probably a big part of why capital expenditures for the company has been so consistently low over the years. Plus, these innovations only tend to take place every 7 to 10 years per store. Finally, it was mentioned on the conference call that it's still too early to tell how much franchise growth can be expected out of the Wetzel's Pretzels brand. But MTY will be franchising out new locations soon, and the management expects to have the obligatory stores built within the next few months. Meanwhile, the creation of an easily franchisable model for the famous Dave's brand will probably take a little while longer to properly conceive. And that was it for the quarter. As for my standing, I liked pretty much everything that I heard this time around. The company paid down a chunk of debt, reduced their variable interest expense risk, the trend of store closures appears to be slowing, the higher growth rate of cost relative to the revenues is starting to look more favorable, free cash flows seemed reasonable, and there are plenty of reasons to expect future free cash flows to have strong positive growth in future quarters. So, based on what I can see, it looks like these acquisitions are going to turn out well. Whether they were a better idea than repurchasing shares back in the high 40s and low 50s, only time will tell. But nonetheless, there isn't too much to complain about this quarter. Naturally, showing good quarterly results translates into a stock price that climbs up over 5.5% from the open, at least before careening back down to end the day a couple of percentage points below where it opened. What caused this manic day? I have no idea. It seemed like the market was pretty happy about the results at first, and regardless of the share price peculiarity, I'm still happy with the results several days later. And I think that the company certainly looks to be in better shape than it did last quarter. And with the price a good bit lower on top of that, I honestly can't complain about much, and I don't really have anything else to say on the matter. The company just looks cheaper and better than last time, and that's probably a good thing for investors. So if the stock stays anywhere around the current price point, you'll definitely continue to see me buying more shares in the monthly portfolio videos here on the channel. That said, I'm still relatively low on cash in my TD brokerage account, so I'm going to be a little bit more selective with my buying there. With all of that out of the way, please be aware that my opinions on individual securities may be incorrect and that it is very possible that I've made mistakes in my analysis. So make sure to do your own research and come to your own conclusions before making any investment decisions. I am not a financial advisor, and this video is not financial advice. This video was made for educational purposes and to highlight my own opinions. This video should only be relied upon for inspiration to do further research into the company outlined. After all, I'm just a Canadian who likes investing and sharing what I've learned with others. And in doing so, I hope that you found something of value in this video. And if you have, please consider sharing it with others. Thanks for watching all the way to the end, and enjoy the rest of your day.